Hi, welcome to my show. This is DrMNP. So this week we are going to talk about the consumer discretionary spending. We will talk about 4 stocks, okay? So let me first share my charts here. And these are my charts. All right. So here is the customary disclaimer, which states that this is an informational show. And it's not really a recommendation in terms of investments, and the investment decisions are your own, okay? All right. So before I start talking about what happened in the stock market last week, I just want to let you know that this will be the last show this year in 2022, and we'll take the winter break, the holiday break, and we'll come back in January, and we'll talk about the outlook for 2023 and some of the top picks we have for 2023. Okay. All right. So back to what happened in the market last week. So last week was kind of eventful in the sense that on first, in the beginning of the week, we had the CPI report. The CPI report was better than what the market was expecting. So the market was very enthusiastic, and the S&P 500 went up a lot. And you can see that from the graph. And that was Tuesday. And then Wednesday, the FOMC decision was made, and FOMC decided to raise the interest rate by 0.5%, which was expected. So there was no problem. But the problem was in the press conference later, Powell was very hawkish. He let the market know that they were going to keep the market, keep the interest rate higher than what they were expecting, the terminal rate, and it was going to be kept there for a longer time. And the whole tone of Powell was very hawkish, and the market didn't like it. They got worried, and the market crashed, right? And then on Thursday, we got the retail sales numbers, and those numbers were weaker than expected, and as a result, the market went down as well. So two things the market did not like. One is the indication from the retail sales is the economy is slowing, and we are probably going to be in recession in 2023, which is getting more and more certain. And then the Fed is telling the market that they are going to be very aggressive in terms of the interest rates. They're going to be, very patient in terms of pausing or in terms of bringing the interest rate down. So these things the market did not like. So it came down a lot on Friday as well. Okay. All right. So what do we do now? What are the stocks we are going to look at? So as I said, 4 stocks in the consumer discretionary sector. Okay. So this is a sector where the business depends a lot on how much consumers spend. And the spending is discretionary. In other words, the consumers can cut down on it without any problem. And they can, even, not use these products and services these companies provide. So these stocks tend to be very sensitive to the economy. Okay. So the 4 stocks I have chosen are Starbucks, the SBUX. SBUX is the symbol. And the Chipotle Mexican Grill, which is a restaurant, CMG. The third one I've chosen is LOW, LOW, which is a Lowe's, the retail chain for home improvement. And then the last one is Nike, which makes shoes and apparels, as you all know. So let's first talk about Starbucks, right? Starbucks is a major coffee chain. It makes specialized coffees, and they also sell snacks and stuff like that. They provide an environment where people can sit down and relax and, even do some work. So it's a very popular place. And the next one is this CMG, the Chipotle, that is a popular restaurant as well. And then the third one is Lowe's, which is the home improvement store. So people get products for gardening, for home improvement, that type of thing. And they're a big chain, but they're mostly a US-based chain. Whereas, Starbucks is all over the world. I think they have 29,000 outlets. They're in United States and Canada, of course. They're in Europe. They're in Asia. And they're expanding every year. They're adding new stores every year. And Chipotle is mostly a US-based, but there are some in Europe. Lowe's is US-based. And Nike, of course, is a worldwide brand. And they have lots of endorsements from top athletes in tennis, for example. Federer used to endorse them. All the top basketball players endorse them. So it's a very well-known brand, right? And so let's look at the prices. So on Friday, the price of Starbucks was 98 change, and then CMG was 1,462 and change, and lowest 206, and Nike was 105. Do they pay dividend? Some of them do. 3 of them do. Starbucks pays pretty good dividend. 2.1 is not bad. But the interesting thing about Starbucks is they increase the dividend every year. And for the last 5 years, the growth has been 13.75%. So that's a very good dividend growth stock. Now, Chipotle does not pay any dividend. And Lowe's pays a dividend. And in fact, they have increased the dividend very well over the last 5 years, almost 20%. And Nike also pays a dividend, and it has been growing more than 10%, more than 11%. Okay. Now, how did these 4 companies do, in 2022, in the last 52 weeks? So we know the stock market is down by 19%, as of Friday. The consumer discretionary sector is down 34%. So compared to that, let's see, the Starbucks is down 15%, better than the overall stock market, and a lot better than the sector. Now, same thing in CMG, better than the stock market, better than the sector. And same thing in Lowe's. However, Nike has taken a beating, and it's actually worse than even the sector, a little bit worse than the sector. So what is the reason? Some of these stocks not only depend on what's happening with consumer spending in the United States, they also depend on China, especially Starbucks and Nike. So Starbucks was, affected by that, but they have recovered a little bit. Nike is still being affected by that. And China reopening that's happening right now should help these stocks a little bit, okay? So let's talk about the analysis of these stocks, right? So Starbucks. So here's a chart, right? Starbucks was trading, 120 plus, 111 plus, and it went down. It went down as low as 68 because some of their earnings were not good, and there was a big worry about China, and there was a worry about efficiencies in the company. But things started getting better. They have, straightened some of the efficiency problems, and the stock has recovered. So over the last 52 weeks, they had a low of 68 and a high of 117. And what is the consensus? The consensus for the next year EPS is 3.42, and the target goes from 88 to 136. So let's do our own analysis and see where we come, okay? All right, so as I said, the consensus is 3.42, and I think they will meet it. In fact, they may slightly beat it next year. They'll be helped by the China reopening. And, although the recession is going to come and, consumer will cut down on spending, the Starbucks spending, the coffee spending will be one of the last ones people will cut. So I think they're not going to have that much of a problem. Their current forward PE, their PE for the price, which is 98 and change on Friday, for the forecasted earnings is 30. Now for next year, the forecasted PE is around 24 to 35. So when does this 24 happen? When the market, the overall market is in trouble, right? So when market goes down, everybody goes down. Now, the forecast for next year, we'll talk about that, in January more. The low is around 3,200, right? So when that happens, Starbucks will also go down and their P will be around 24. And when the market starts recovering towards the end of recession, which is probably going to be towards the end of next year, will be around 35. So if you use that again as their forecasted earnings, their low will be around 84 and the high will be around 122. So what is the best time to buy Starbucks? It's when it's less than 90. So it will go below 90 over the next 2 months. And between 85 and 90, you should buy this stock, accumulate this stock. And if you do that, you will have a return of more than or approximately 30% if you hold on to it for 12 months. Now, Starbucks is a good stock to hold on for a long time because they do increase the dividend every year. So it's a growth and investment, a growth and income stock. So that's a good stock to have in your portfolio for a long time. Okay. All right. So let's talk about CMG, the Chipotle. Now, I'm analyzing this stock because I got a request to analyze this stock. And as I said, it's a big restaurant chain. A lot of you have seen that. A lot of you have gone there. People like it. They have more than 3,000 outlets in North America and Europe. They have been down 12% in the last 12 months. Their low has been 1,196 and high has been 1,776. And on Friday, they closed at 1,462. But this stock, as you see, is very volatile. Not only it goes up and down with the market, they also go up and down because of their earnings and because of their forecast, etc. So be aware that this is a very volatile stock, but overall it has done very well, right? So it's always in the news. So let's look at the consensus. EPS is 42 unchanged, and the target is 1,500 to 2,500. So there's a wide range in the target as well. So if we do our own analysis, let's see what happens. So the consensus is 42.6, and I think they may not meet that consensus. The current forecast is around 41, and the forecast for PE is 30 to 45. And I said before for Starbucks, the 30 will happen when the market is at the bottom around 32 and change, right? 3,200 and change. So that's when you should buy it. So if you use that 30 to 45 range, the low will be around 1,200 and the high will be around 1,845. Similar range to what happened in 2022. So what's a good time to buy this stock? When it's less than 1,300. So it's around 1,462 today. So it'll probably go more than 10% down, by March, April or so. And at that time, it's a good time to buy. And if you do enter this stock at that point, and if you hold on to it for more than 12 months, you'll have a return of around 35% or more. So that's a good thing. They don't pay dividend. So, that's a negative on them, but people don't buy this stock for dividend growth. They buy it for, capital gains, and they trade it. A lot of them trade this stock, okay? All right, let's talk about the third one, which is Laos. So as you know, Laos is all over the country. They have approximately 2,000 stores, and they have been down 19%. So people are worried about the housing market. How they do every year depends on how the housing market is doing. If people are not buying houses, their sales goes down. And right now, there's a lot of concern about the housing market, and that's why they have been down 19%. However, they're a very well-run company. Their margin is very good. And so they should hold, even if the housing market goes down, they may not go down a lot. So for the last 12 months, they have been low 170 and high of 260. And on Friday, they closed 206. Now their consensus is 13.73, the market consensus, and the target is 159 to 300, right? So let's do our analysis here. So, as I said, the consensus from the analysts around 13.73, and they may not meet that because of the recession and because of the housing slowdown, etc. So they may make 13.5. So they're not a very expensive stock compared to, say, Chipotle or Starbucks. They're selling around 15 for the PE, right? So the forecasted PE is 13 to 20. 13 is the low end and 20 is the high end. 13 will happen when the market is at the bottom. And at that time, the stock will hit around 175. And then the high towards the end of the year, as we come out of the recession, is forecasted to be around 270. So when is a good time to buy this stock? When it starts going below 185. So right now it is around 206. So again, when it goes down more than 10% from today's price, that's a good time to enter. That's where the buy zone is. And if you buy it, in that zone, and if you hold on to it for more than a year, you will have more than 40% gain. So, and this again, because of the income growth, the dividend growth, this is a good stock to hold for a long term. Okay. All right. So we come to the last one, which is Nike, and they sell through channels, right? Most of it is sell. Their apparels and their shoes, etc., are sold through channels, but they do have some flagship stores in major cities, right? So as I said, they have gone down a lot. So the 12-month low is in the last 52 weeks is 83, and their high is 171. On Friday, they closed at 105. So the target for next year, the EPS target, the consensus from the analyst is 3.78, and the target is for the stock itself is 79 to 185. Yeah, but look at the trend. They have been going down. They did come back because the market came up a little bit in March. Sorry, in November and December, but now it has started going down again. So the trend, in other words, the overall trend going down may continue for a while. Okay, so let's be careful about this stock. So their consensus is 3.78. They may come close to that, but they won't meet it or beat it. They may make around 3.7. So the thing that could help them is the China reopening, right? So the activities in China will pick up, and that may help them. It's an expensive stock. The current P is 28, and the forecasted P is 24 to 35. 24, again, as I said, when the market is in the bottom. And if you use that forecasted PE, the low for this stock will be around 88, and the high won't be a lot. It will be around 130. So a good time to buy this stock is when it goes below 90. So again, you're looking at, maybe 15% downside from where they are today. And at that time, you can enter this stock. And again, if you hold on to this stock for more than 12 months, there's a good chance you'll have more than 40% return. Okay. All right. So all these four consumer stocks, they are popular stocks. In other words, a lot of people own it. And because of that, there's a little bit of volatility with these stocks. And they're very sensitive to recession, as I said, consumer spending. So be aware of that. And the best time to buy these four stocks is when we're about to enter the recession, right? All right. And so that concludes this week's presentation. And as I said, this is the last presentation for this year. We will be back, in January, and then we'll look at the market outlook for 2023, and we'll talk about some topics. Okay. All right. Have a nice holiday, and thank you very much. All right. Let's end the presentation as of now, and I will see you after that. Okay, here is stop.